How today or swing trade S&P 500 stock index in 2016 like a master, part 1. This is the part 1 of the series of video that we are recording talking about how today or swing trade S&P 500 stock index in 2016 like a master. Okay, so this is part 1. In February, somewhere around 15 or between 15 to 20 of February 2016, I will be recording the second part of this video, and we will be talking about the equilibrium price level that they or swing traders and investors must know if they are trading the S&P 500 index. Also, somewhere around August and September, I will be recording another part of this video, the third part of the video, and I will be highlighting other key level that traders and investors must pay attention to if they are trading the S&P 500 index. As of today, this is the beginning of this series of video, and I want to share with traders, day trading tips, swing trading tips, and investment trading tips that they can apply throughout 2016 if they are trading the S&P 500 index. For traders that are very new, beginners, I want to clarify to traders, if you are trading stock, if we are talking about the market, whether you are in Japan, whether you are in London, whether you are in America, when we are talking about the market, this is the market. The S&P 500 is what we call the market. So we are trading first the market before any other stock. So if you are trading Apple stock, Google stock, or Intel stock, you are trading first the market before these stock. So the market will influence the stock that you are trading. So the market, the trend of the market will determine the trading strategy or the investment strategy that you should apply. So we will apply bullish trading strategy when the market is bullish, and we apply bearish trading strategy when the market, is bearish, and we apply, a consolidation or a balanced market trading strategy if the market is consolidating, all right? On a daily chart, the S&P 500 index, which is the market, is consolidating, all right? It's oscillating between two levels. It's oscillating between the high of 2015 and the low of 2000, all right? 15. So this, because of the activity that is taking place in the market, this will determine, the trading or the investment strategy that we must apply. All right. But so if we are applying a crazy strategy and we are ignoring the market, we can be on the wrong side of the market, if you understand what I mean by that, So the market will decide what we are doing, But there are more to this, but because I don't want the video to be too long, but I want you to understand that we are trading first the market before anything else. Apart from the market, there are other things that will influence the market itself, which we call market indicators. All right? So the first key level, I don't want the video to be too long, so the first key levels that stock traders, especially those who are trading stock, those who are trading the S&P 500 must know, is 2134. 2134, that's the high of 2015. Have a notebook or have a diary, something, on your computer. You are trading S&P 500, you are trading E-mini, you are trading American stocks, you are trading in Japan, you are trading in London. You want to know the key level of the markets because decision will be made around those key levels, So first key level, the high of 2015 is at 2134. The low of 2015 is at 1867. 1867, that's the low of 2015. The media line of 2015, I do not give the exact media line. I always use, the nearest number to the media line. I have a reason for it, but I'll tell you now. So this is not the exact media line, but the nearest level near the media line is 1996. That's the orange line here, 1996. So high 2134, median line 1996, low, okay, 1867. And the market is oscillating between the high and the low. So the oscillation or the consolidation or the balance market can sweep sides. So if we see a market like this, okay, a balance market or a consolidation taking place, we divide it into two. That's why we have the median line here. So a consolidation can take place from the lower part of the market pattern to the highest point, which is 2134, or we can see a minor consolidation, which is a fractal pattern of the bigger consolidation that can take place on the lower part of the consolidation or the upper side of the consolidation. What do I mean by that? The price can also oscillate or consolidate between the median line and the low, or between the median line and the high. But remember that the consolidation is between the high and the low. But that consolidation can sweep side, either stay above the median line or below the median line. Okay? All right? So, which strategy should we apply now? We will give priority to bullish signal on or near the low of 2015. So, it doesn't mean that we just buy here. We will apply a top-down trading method without ignoring the economy news and the market pattern near the level of 1867. So we are on a daily chart now. You can see that this is 2016 and the price found a support near that level and it's going back up. Which level is it going? It's going near the median line of 2015. But remember what I said to you before. Anytime we have any channel, we can divide that channel into two. So that is another hidden level here, which is the median line of this channel, the orange and the green. So this smaller channel here, you see the size. This is this channel here. This is the size of the channel. Okay, we have another median line near the level 1934. That's where we are today. So if I switch my time frame, this is a live chart because the market is open now. You can see that's where traders, you see today, that's today. Okay, today is what? Okay, today is the 1st of February 2016. That's where we are now, you see here. In this zone. So price went all the way there and it's changing direction there, the median line of the smaller channel. Alright, you see now? That's why we are watching. So we are trading, we want to know where the price is likely to change direction, where traders are likely to take profit, where are they likely to enter the trade. Alright, so this level here, 1934, is the median line of the smaller channel. Okay, this is what I'm saying to you. Okay, it makes sense? So we want to know all the key levels. So I have given you so far 3 key levels: the high, the median line, and and a low of 2015. Okay, it makes sense. All right. So the next thing that I want you to understand, the market pattern will determine, the trading strategy that we should apply. So traders, professional traders, are right to look for opportunity to buy near this level, right now. So as the consolidation taking place, remember that it can switch side. It can go up all the way to the median line, change direction, come back down, or it may continue all the way to the high of 2015. But we must know the key levels, the low, the median line, and the high. And if we divide the smaller channel, as I did here, we have another key level here. We can divide also the upper channel somewhere here. We will say 2068. So whether we are day trading and investing, this will allow us to time our trading or investment decisions. So this is about the daily chart. So a consolidation, a balanced market is in place, and we must apply the appropriate trading or investment and decision at this point in time. So let's go to the monthly chart to see the bigger picture. On the monthly chart, you can see that the market pattern is what? A rising channel. So remember, the market has been going up since 2009, and we are now in 2016, All right, so 6 years is gone. Now this is the beginning of the 7th year for this current trend. But as you can see, I have a bigger green channel here. This is the rising green channel. Can you see? as I told you, we can divide that channel also into two. Why do we need to do that? Because we want to know where and when the professional are likely to buy or sell. So you can see that the price is now below the median line of our green rising channel. Yes or no? And it's coming near the edge of, you see, okay, here, you see, all right? The month of January, the price went in a little bit out of the channel, okay, the green channel, found its support near the pink line here, all right? That pink line, by the way, is the opening price of 2014. The pink line that I have here, that's the opening price of 2014. So the price went out of the green channel, a little bit below the pink line, which is, okay, the opening price of 2014, found its support, and went back inside the channel. Okay, all right, it makes sense. So if as the price now out of below the median line of 2014, below the median line of this green channel, okay, correcting myself, below the median line of this green channel, we will say that the bullish momentum is slowing down. Okay, why? How do we know? As you can see on the daily chart, the price is no more in a rising channel on a daily chart, but it is in a balanced market. It is in consolidating, all right? So our trend is not going as far as it was before. It's slowing down, but the green channel is still in place. So there is a bit of pause, all right? There is a bit of a slowdown in this bullish trend. All right, that's why we must now adopt, okay, the appropriate trading method at this point in time. So, if the price, okay, if you want to sell, okay, for instance, because the market pattern on the monthly chart is still bullish, yes or no? So, if you want to buy, the best place, as trader did here on the edge of the green channel here, using a top-down trading method without violating the market pattern, okay? All right, it makes sense? On the edge. Also near the low of 2015, you remember, consolidation, want to buy near the low, okay? So that is going up. It's now near the median line of the smaller channel, which I've shown you now on the daily chart. It's heading towards, okay, the median line of 2015, all right? So usually you will see that the price may go up, as you can see now it's going up, it may go up to retest again the median line of the median line of the green channel. So it breaks below the median line, is now trying to go back up to retest the median line. Will it reach this level? We will see. But before it can reach this level, there are other key levels that we must watch. The median line of 2000, okay? 15, all right? And before we can reach, okay, the edge of this median line of this green channel, the rising green channel, okay? So there is a high chance that the S&P 500 may try to go and retest this level. Don't forget what we have said already on the daily chart. It's consolidating. So you want to buy or sell? Pay attention to the daily chart consolidation, upper side, lower part. We want to look for opportunity to buy near the lower part. Look for opportunity to sell on the upper side of the consolidation session. Be aware of the median line of each channel, either the bigger channel or the smaller channel, so you may know exactly where and when the professional are likely to enter the market. So bullish market pattern on the monthly chart, telling us that the trend is still bullish, but the daily chart is telling us that, okay, though the long-term trend is bullish, okay, it's slowing down at the moment, okay? It's slowing down. It's a bullish trend, but it's not as strong as it was before. What usually takes place, my friend? We may see a price going up, okay? And then we may see a slowdown. It can be a triangle. It can be a consolidation. It can be just a quick correction. And we may see a continuation. All right, that's one aspect. Sometimes we may see a price going up like this, and then we may see a slowdown, and then a change, the price will go down. All right? Sometimes you may see the price will go up like this. Okay? Pay attention carefully because this is for 2016. You may see the price may go up like this. Okay? And then it will slow down a bit, and then start to go up a bit, only to find a resistance and come back down. All right? Or sometimes we may see a consolidation that is prolonged for a long time. It makes sense? So where are we now? We have a bullish trend, but that bullish trend is now consolidating, is slowing down. Why the price consolidating? The price consolidating for many reasons. The market is trying to, reassess the current market environment, the fundamental, to know whether this market is overbought or is still oversold, whether they should continue the trend or reverse the trend. So the consolidation is a pausing period where the market is debating, so to speak, which means the bear, some traders believe that they should sell here near the high of 2015, and some traders believe that the trend should continue. So those who are bearish are selling, those who are bullish are buying here. So it's a balanced market. Now one side will win, either the bull. If the bulls are winning, the price must find a support above the high of 2015. So prior to bullish signal, so for the long term, all right, the trend will become truly bullish, or a continuation will be in place only if the price finds support above the high of 2015, 2134. If it breaks above that level, run away a bit, pull back, retest that level to convert that 2134 into support level, and we receive a bullish signal, we can expect a continuation. But remember this scenario, consolidation, breakout, the price try to go up a bit only to find a resistance and pull back down. That's also possible. So this is a failure of a breakout. It makes sense? All right, it makes sense. It's also powerful, all right? So this is what's happening now. So the price consolidating. If we want to sell, truly sell, the price might go below the level of 1864, 1867 instead, 1867. That's the low of 2015. Break below, retest, turn around. Here it is, this level here. Break below the low of 2015. And then gently come back and retest that level, find a resistance, and come back down. In this scenario, there is a high chance that the price will prefer to retest the channel, because this channel, the green channel, was supporting the price for a long time. So if the price finally come out of it, okay, it will come out like this. You will try to retest the green channel before, okay, going down. So remember that, okay? Oops, I moved my line. My median line, of 2015, 19996. Okay, hold on, please. I want to change that quickly because I need it, okay? 1 second, please. All right, so this is it. So we may see price coming below the median line of the green channel, as we can see now. And it's now trying to retest the edge of that median line before coming down or before going up above the high of 2015. That's one scenario. Or the price may come out of the green channel altogether and try to retest the low of 2015 before coming down, or preferably on the edge of the green channel right here. Once again, the key levels are not magic levels, but they allow us to navigate through the market to make decisions on or near those key levels. It makes sense? All right, so these are the scenarios we must watch. So the trend will become truly bullish if the price finds support above the 2134. In fact, the bearish traders that are selling near the high of 2015, 2134, they don't want the price to go above that level. So if the price goes above that level, their support, their stop loss will be taken out, and they will change their strategy. They will be forced to close their trade, all right? And the price may find a support above 2134. All right? So in fact, we can say to trader at this point in time, priority to bearish signal below 2134. All right? Priority to bearish signal below 2134 until we reach the low of 2015, which is at 1867. As you can see, we are near that low now. So that recommendation is already passed because the price near that low of 2015. So because the price consolidating on the daily chart, the bullish traders that are buying near the low will be forcing the price up. So where the bear would like to sell those bulls, they would like to sell them either on the edge of the median line or near the median line or 2015. So that's what we want to know. They can sell them down here as the bulls are pushing it up. The bear will challenge them here. They may challenge them near the median line of 2015. And this is also one level that we are watching today. Okay, the median line of the smaller channel. Okay, you see that line here, 1934. Okay, so you go there, and some bear are selling here. The price must now go above that level. So if you want to buy today, so allow you to go above it, break a ball, retest, turn around. That's the best way to buy. Okay, all right. So there's a key level here, 1934. Okay, it makes sense. So this is about how today or swing trade. Okay, S&P 500 stock index in 2016. Like a master, part 1. All right. So I want to show you more. There are more key levels that I want traders to know. For especially if you are a new trader, you may think that, George, why do I need all those key levels for? The reason is ordinary traders very often will focus on MACD, on technical indicators. By the way, I want to go to the weekly chart. I want to show you what's happening there with my MACD. Okay. Where is my MACD now? Okay, here we are on the weekly chart. You see MACD here? This is what we call deviation of moving average, okay? So last year, as you can see, there was a trend that was in place. There is a big deviation between the MACD and the equilibrium price level, telling us that, a trending asset is now in place, okay? A trending market is in place because the distance between MACD, this the gray line is MACD, the dotted line is the central line or the zero line or the equilibrium level. There's a deviation, between MACD and the central line. Is confirming to us that the trend is quite strong. But now we see what we call convergence of moving average. All right. This is a conversion. So MACD now is converging towards the central line. So if I did that already, now it's hanging around the central line. What is it telling us? Remember, the ultimate role of MACD is to identify trending financial instrument and not trending financial instrument. So what is a trending financial instrument? Financial instrument that are in a rising channel, and the distance between MACD and the central line is quite wide. Now that distance is quite low because MACD is now converging towards the central line. Is quite close to the central line after a long period of trend. So now MACD is telling us that that trend is slowing down. We are now expecting a consolidation. So here we are. We have a consolidation between the high and the low of 2015. Okay? If the price out of that channel, what do we need to do? I'm testing you a bit. We'll project that channel, multi-talented trading. All right? We'll project that channel. You see, this is the size of that channel. We'll project it down. Okay? You can see it here. If I change my time frame, probably on the yearly chart, you'll see. All right? Where is my... I think it's this one, is it? Okay. We'll project, okay. All right? That, you see, the wave between the green line and the red line, if the price is out of that channel, we'll project it down like this. As we project it down like this, we highlight that level, 1601, and also the median line of the new channel that we have projected down. This is about market geometry. It makes sense? All right? It makes sense? So let's go back again. I'm going to go back again to the monthly chart. I have not finished yet. There are more key levels that trader must watch. The opening price of 2014, which is the pink line here, all right, is 1845. Note it down, 1845. It's a very important key level. 1845 is the opening price of 2014. That's the pink line there. If I go, for instance, hopefully we can see it on a daily chart. This is it. You see? Here we are, my friend. That's the pink line. 1845. Are you with me now? 1845, that's the pink line there. Look, here, on this particular day, okay, Where are we? On this particular day, you can see that the price went below the pink line or quickly went back above it. And since then, the professionals start buying. You see here, that's what's going on now. Now we are near another key level, 1934. Okay, that's how professionals make a decision. The opening price, these are very, very important, powerful support and resistance level, 1848. The opening price of 2014. It's good to know, isn't it? Navigation, okay, from one key level to the next key level. So if the price here it was going down, and reaches this level, okay, if you were selling because the price was in a declining channel, you will exit your trade here. Now you will wait. See, this is a candlestick pattern, okay, all right. The doji plus a bullish candle, all right. And then after these two candles, you apply top-down trading method, a bit of blah, blah, blah here. Here it is, boom, up. Okay, next key level, 1934. If you want to buy again, you wait again. Allow it to run away from it. Don't be the first person to buy. Pull back, retest the 1934. Take it up again to the next key level. All right? If you find a resistance below 1934, break below, retest, boom, come back down. All right? Remember that the market pattern is consolidation. We may see many, all right, few, let's say few mini consolidation. This is what we call fractal. So you see a consolidation on the daily chart, you may see a consolidation on the hourly chart, on the 50-minute chart, okay, on different time frame. All right, this is what we talk about, fractal pattern. Consolidation, that's the message the market is telling us now, so you need to watch it out, okay? This will determine our trading strategy. I'm talking to you now for 26 minutes. So next key level, 1845. The opening price of 2014, below that level. Okay. We have also the low of 2014 at 1737. 1737. The low of 2014. Note it down, very important key level. That's the dark green line here. That's not the exact level, by the way. But just remember that the low of 2014 is somewhere here near this black line at 1737. You need to note it down, all right? You need to note it down. Because if the price come back down below the pink line and the final resistance, the next key level that we must watch is this one near the 1737. That's the low of 2014. The next key level that we must not ignore, very, very important key level that you should not forget toward 2016 is the median line of 2013. Median line 2013. That's the pink line here at 1632. 1632. You can't afford to forget the median line or 2013. 2013. Do not forget the median line at 1632. The next key level, which is the last key level, that you must remember is the high of 2008. This is the candlestick bar of 2008. What has happened in 2008? We have the financial crisis. And since then, the price went above that high. So in 2008, 2007, we were in a bearish market. And we see this bearish candle. Finally, a bullish market has started in 2009. And we break above the high of 2008. This is significant price, okay, progression. This is a significant key level, the high of 2008. You can't forget that level, 1471. Hey, do not forget this level, 1471. You can write it on your fridge. You can write it on your wall. The high of 2008, a very important psychological price level, 1471. 1471. Do not forget the high of 2008, whatever you do, in 2016. Because if the price going down and come near this level, professional will make decision right here, right here. The bearish momentum, if we have a bearish season, in fact, the price may go back below this high. Do not forget 1471. 2071, the high of 2008. Another crucial support and resistance level that you must not forget is 1632, the median line of 2013. All right, don't forget those key levels. To summarize, the key level that traders must remember, the first key level is the high of 2015, 2134. The low of 2015, low of 2015, 1867. The median line of 2015, 1996. The opening price of 2014, 1845. The low of 2014, 1737. The median line of 2013, 1632. And the high of 2008, very important key level, is at 1471. Ladies and gentlemen, if one wants to buy, it's better for one to buy on or near a key level, a key support level. All right? There are many support levels. We can see a support level on the hourly chart, on the 50-minute chart, on the daily chart. But the key level that we are talking about here, these are key levels from the yearly charts. These are the most influential support and resistance level. Why? The price did change direction here. Remember in 2008, this was a very important level. People sold it here at 1474. And since then, the price did not go below that level. It's a very important level. There are reasons, fundamental reasons, technical reasons, why the market has changed direction here. It's here on the charts. So these are the levels where decision will be made again, once again. That's why if we are day trading and swing trading, all we have to do is to pay attention to the current market pattern. What is the current market pattern? Consolidation on the daily chart. If you break above it, above the high of 2015, we project the size of that consolidation on the upper side. We also highlight the median line of our new channel. If it goes below that consolidation, we project the size of that consolidation to the lower side. We'll also highlight the median line of that consolidation. We are looking for what? Trading signal, okay? So in order to buy or sell, we are looking for signal, all right? So what will cause the trading signal? Trading setups cause trading signal, all right? Without a valid trading setup, there is no valid trading signal. So what are we looking for? We are looking for high probability trading setup on or near the key level that I have given to you now. So if you see a trading setup near those key levels, all right, next step, apply a top-down trading method around those key levels. As we are using the technical analysis, we must not ignore, okay, the economy news, all right? The economy news, the fundamental can change the dynamics of the market. As I was telling you at the beginning of this video, all right, there are market patterns that can market indicators and market leaders can change the dynamics of the market itself. So we are trading fast, the S&P 500, wherever we are in the world, okay? But the market leaders and the market indicators can change the market itself. So as we are trading the S&P 500, we are indirectly trading also the market indicators, okay, and the market leaders. Go to www.dayprotrader.com, click on Market Watch, and read everything. This will allow you to understand a little bit more about market leaders and market indicators. Crude oil is a market indicator. The dollar-yen is a market indicator. Gold is a market indicator. Silver is a market indicator. Google stock is a market leader. All right. Boeing is a market leader. These market leaders and market indicators can influence the market itself. All right. So you are trading stock. You are trading S&P 500. Go to Google Finance. Go to Yahoo Finance. Check the economy news. So you may apply, okay, the best strategies. It makes sense? It is also powerful. This is about how to day or swing trade S&P 500 stock index in 2016 like a master. I will be recording another video in February and the last video in August or in September 2016. As you can see today for day traders, you can see that the price is now near the median line of our smaller channel, the level 1934. So that level, if I call it now, I leave it as it is, we can switch time frame and go even from the hourly chart, we can go to the 10-minute time frame. So what is the line? Yeah, here we are. What's happening there now? Okay, it's still below it. So all you can do here, just wait. There's nothing going on now. But you can see that a lot of traders will just buy and sell without any reason. Where are you buying? Where are you selling? You want to buy at a support level. The best way to buy is if the price is at a resistance level, wait for that resistance level to be converted into a support level. Breakable, retest, turn around. That will make more sense, okay? If you want to buy, okay, pay attention to the market pattern. Buy somewhere near the edge of the rising channel. That will make more sense. The risk will be lower. So as you are buying near the lower part of the rising channel, make sure that that point also is a kind of intersection between the horizontal support and resistance level. So if you adjust it, okay? So this will be a better place to buy, somewhere here instead of here. Okay, let's adjust this line again and to another, you see. If you move to the top here, the intersection point between a trend line, it's a hot spot, a trend line, and a horizontal support and resistance level. These are hot spot trading zone. It makes sense? It is also powerful. For swing traders, all we are looking for, high probability trading setup, not in the void, but somewhere near those key levels that I have given to you now. One has happened already here this year in 2016, near which level? Okay, which level? All right, the pink line, the opening price of 2014. Did you see the pink line? There was a trading setup here. A high probability trading setup. Why? Because we have a consolidation. The price is below the lower part of the consolidation. Now we price retesting that level, has changed direction. We use a top-down trading method. So trading setup, high probability trading setup for swing traders on or near key levels. Now we apply a top-down trading method. Okay? As we apply the top-down trading method, we must check the economy news and the fundamentals. All right? It makes sense? So you can look for a trading setup on the weekly chart, okay? And then you go to the 4-hour time frame for the signal, and you go to the 15-minute time frame for the entry. Or, best way, myself, I prefer for swing trading, monthly chart, daily chart, monthly chart for the trading setup, okay? Daily chart for the signal, and hourly chart for the entry. We can zoom into the entry down to the 5-minute time frame. All right? So these are not the only way one can use the multiple time frame trading method for swing trading purposes. But the point of this video is to highlight the key level that professionals will be monitoring, okay, examining, okay, throughout 2016. They will be placing order on or near those key levels. It is very, very important for day and swing trader and investor to know where and when the professional will come into the market. The market will become completely bearish if we find a resistance below the low of 2015. It will become strongly bullish if we find a support above the high of 2015. All right. So far, the current market pattern is a consolidation. It's a balanced market. Okay. It's telling us that we must adopt, okay, the appropriate trading or investment strategy, which means we want to buy near the low and sell at the high, and sell at the high of 2015 and take profit near the low of 2015. But there are other sub-channels inside the bigger channel. All right. This is the end of this video. This is the end of this video about how to day or swing trade S&P stock index in 2016 like a master, a part 1. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW at 24 Traders. Speak to you soon.